Welcome to today's Explainer, where we're framing the intense, conflicting market forces acting on Bitcoin today as an epic, high-stakes battle. I mean, honestly, the crypto market on this August 13th, 2026, feels exactly like a dynamic anime-style showdown, complete with vibrant comic book-level clashes. We've got cooling institutional demand, massive regulatory shifts, and escalating geopolitical tensions, all colliding at the exact same time. Okay, let's dive straight into this massive number, $158 million. That's the daily market liquidations we're seeing right now. It's essentially traders having their leveraged bets forcibly wiped out. Bitcoin has just been under relentless pressure, slipping for 4 consecutive days into that $63,300 to $63,600 range. With 84 million in longs and 73 million in shorts completely erased, the volatility is just brutal. The market is desperately searching for a floor, but opposing forces keep knocking it off balance. And this perfectly illustrates the macro tug-of-war happening on the global stage right now. On one side, we have yesterday's rescue flare, which was a soft consumer inflation data print coming in at 3.4%. Normally, this would be a massive bullish signal, lowering the odds of a Fed rate hike. But on the other side, we've got our heavy hitter, escalating geopolitical tensions, specifically those stalled ceasefire negotiations in the Middle East. Right now, that really dark geopolitical shadow is just completely overpowering the bullish relief of the CPI data. So this crash of forces leaves the crypto fear and greed index locked in a really tense standoff at 44. Since we're under 50, the market is definitely leaning towards fear. It's essentially holding its breath. Look, it's not panic selling into the extremes, but it's certainly not chasing risk in a state of greed either. This number perfectly reflects a paralyzed market that's just waiting for the next major catalyst to break the stalemate. Now, the ultimate macro showdown happens today at 8:30 a.m. Eastern Time with the Producer Price Index, or PPI, release. The consensus expectation is a 4.9% year-over-year print. If we get a print below 4.9%, well, that pulls rate cut bets forward and acts as a massive risk-on pump for Bitcoin and Ethereum. But if that print comes in hot, above 4.9%, it signals that inflation in the supply chain isn't dead just yet, and that's going to trigger a rapid unwinding of leveraged positions. Basically, the entire market is pivoting on a single decimal point today. Meanwhile, our main protagonist, Bitcoin, is actually losing its institutional backup. The so-called strong hands that drove the 2026 rally are starting to show some serious fatigue. Bitcoin spot ETFs just bled $61 million in daily outflows. Strategy, which you might remember as MicroStrategy, has paused their buying and actually sold $108 million in Bitcoin. And perhaps most tellingly, major mining firms like Mara and Riot are selling off their Bitcoin treasuries. Why? Well, to fund their pivots into the booming artificial intelligence infrastructure space. They are quite literally draining crypto liquidity to chase the AI meta. Because right now, the risk-on bid is heavily favoring AI stocks. While crypto struggles, the AI faction is surging with massive double-digit breakouts. Nebius absolutely skyrocketed 34% today. CoreWeave and Supermicro are both up 19%. You guys, this isn't just a separate market. It's a formidable opposing force. Capital that might normally flow into digital assets during a soft CPI print is instead being aggressively deployed into AI infrastructure. But, not everyone is convinced this AI surge is actually sustainable. Legendary contrarian Michael Burry, famous for calling the 2008 housing crash, is bidding heavily against this AI faction. He just added massive short positions across the tech sector, specifically targeting Nebius and semiconductor ETFs. He's out there warning that this aggressive, almost euphoric surge is exactly what the top of a boom looks like. If Burry hits the nail on the head and the AI bubble pops, we could see a massive rotation of capital right back into crypto. All right. Moving on to the boss fight, the SEC regulation crypto vote. Tomorrow brings a truly historic event, the SEC's vote on regulation crypto. This is a 400-page proposal that could permanently replace the era of regulation by enforcement with a formal investable framework. So let's break down the 3 distinct proposed pathways here. First up, the startup exemption allows early-stage projects to raise up to $5 million over 4 years using simple, white paper-style disclosures. Next, the fundraising exemption allows raises of up to $75 million annually, but that comes with the requirement of audited financials and strict reporting. And finally, the holy grail, the safe harbor. This allows tokens to safely and permanently exit their securities classification once their networks become sufficiently autonomous and decentralized. But there is some intense deadline pressure driving this executive action. Consider this the ticking clock of our story. SEC Commissioner Hester Pierce, affectionately known as Crypto Mom and the core architect of this safe harbor concept, is departing the agency in November 2026 for a faculty position. Without a replacement nominated, the commission drops to just 2 numbers. This means the pro-crypto voting window to push this massive 400-page rulebook through is rapidly closing. It is literally now or never. And that urgency is really compounded by what's happening, or rather what's not happening, over in Congress. The legislative alternative to the SEC's plan is the Clarity Act. However, prediction markets have absolutely collapsed the odds of the Clarity Act passing this year to a mere 17%. With the bill delayed by procedural votes and rural Republicans pushing back, this SEC executive vote tomorrow is suddenly the industry's most viable and perhaps only path to regulatory clarity in 2026. Next up, let's check out our side quests and status effects. Outliers define the trend, and critical security warnings. As the main market battles on, we actually do have an outlier defying the broader bearish trend. Hyperliquid, trading under the ticker HYPE, is boldly outperforming the top 10 cryptos today. While the rest of the market is painted red, HYPE is up nearly 3%, trading around $57. The catalyst here is sheer ambition. Hyperliquid is actively seeking CFTC approval to bring its decentralized perpetual futures market directly into the United States. In a market starved for good news, traders are clearly rewarding projects that are aggressively expanding their regulatory footprint. Okay, we need to pause for a critical security status effect. Cybersecurity experts have just disclosed Zoomsday, a really terrifying zero-click vulnerability in Zoom. By manipulating Zoom's annotation system, attackers can hijack your device during a meeting without you clicking a single link or downloading a file. Chillingly, end-to-end encrypted calls are highly vulnerable because Zoom servers literally can't inspect the malicious traffic. Hackers tied to North Korea have already been targeting crypto executives with these scams, so your action item today is non-negotiable. Update your Zoom Workplace to version 7.1.5 or 7.0.6 immediately to protect your wallet software and private keys. To wrap up today's explainer, I want to leave you with this final thought. As these massive forces collide this week, the relentless selling from miners, the massive surge of AI, the threat of Zoomsday hacks, will tomorrow's historic SEC Regulatory Clarity Act as the ultimate shield to protect and legitimize the industry? Or will the dark, heavy shadows of global geopolitical tensions deal a blow that regulations simply can't block? Keep your eyes on the data, update your security, and we will see exactly how this battle unfolds tomorrow.